Ladies and gentlemen, welcome to the Fintech Friday, but it's on a Thursday. So we had to accommodate some schedules today, and that's perfectly fine. And turns out I wasn't even late. Turns out it was Tevis, but glad we're all here. How you guys doing, Roy?
Doing well. It feels weird to be doing Fintech Friday on a Thursday, but here we are for it. And it's a good day to do it. I'm glad that we have Chris here too, special guest. So always welcome. Can't always make it on Friday, but here we are on Thursday. So
how you doing, Chris? Can you hear me?
Yeah, Thursdays work better for me. It's been a decent week. Yeah, I can hear you. Can you hear me?
Yeah, it just seems like there might be a delay. Is anyone else seeing this, or is it just me?
I installed Windows 11 today. And Windows 11, I think, is a virus.
Gotcha.
Yeah, I run Linux for that reason. On my laptop, I need to run Windows, but like here on my home unit, Linux. I think
I'll leave and rejoin and see if it fixes it.
Yeah, I'm saying the same thing.
It wasn't just me, right? It was on his side.
Yeah.
Okay. Tevis, how you doing, brother? You're muted.
I'm doing well. Yeah, no complaints.
Yeah?
And yeah, I think it was on Chris's side.
Okay, cool. So do you guys see all the indice additions to SoFi that just recently happened this week?
Yeah.
MSCI and Bloomberg 500.
Yeah.
Yeah, it's not always the case, but usually being added to these type of indices actually does more for the stock price action than the S&P 500. The exception is when there's very little institutional ownership and or they bypass a lot of the smaller indices and they go right into the S&P 500. So yeah, we've seen really good price momentum. Of course, the company's been doing well for a long time. Just the price action has finally caught up to, I think, where the company has been. So it's nice when that finally happens. I know a lot of our we've had this community, we have each other, we've been fine, but man, there's been a lot of long-suffering SoFi shareholders, and I'm glad that like if somebody is down on SoFi, like they're not down very much, but this is a great time, and I think that we're well on our way to a new all-time high. Now, it may not happen in the next weeks or months. It could take some time, but probably not even that much time, especially the way the price action is going. So it's a great feeling when the moment hits in a stock and literally nobody is down that owns shares. I like that.
I have a little conspiracy really quickly, Roy, before we move on. Is there a reason why your PayPal shirt is not up anymore? Are you trying to signal something to the markets?
Not really, no. I'm still exactly in PayPal as I was before. I'm talking a little bit less about it. PayPal has kind of gone silent too. I'll make a post or two each week. I haven't made any videos in a while. For some reason, that shirt on the wall, like just self-wrinkled. I don't know. Like it kept getting more and more wrinkly. So instead, I've got the Palantir windbreaker up there. So
did you get the job, the office of the CEO, the social media guy for Alex Chris? And you can't tell us yet, and you can't talk about it.
If I received that position, I'm not allowed to say. But no, I didn't. So yeah, it's a nice little windbreaker. Oh, with Palantir on the side too. So
yeah, it's crazy that the brother of the CEO of PayPal takes down the PayPal shirt. Yeah. Like, how do those family reunions end up going on? What happens there?
Awkward dinner conversation.
Yeah. Chris, are you back? Are we here?
I'm here. Can you guys hear me?
You're good.
Okay,
that's much better.
Okay, awesome. Yeah, I'm here. Just laughing at how Roy's not going to get any gifted shares from his brother Alex Chris.
Yeah, I guess not.
Someone got gifted shares of SoFi. Did you like that transition?
That's where it came from.
Yeah. But we ended up seeing index inclusion, multiple indices. However, one is, but get us into some of the SoFi topics to start off the night.
Who, me?
Yeah, you.
Well, we hit all-time highs
one.
this week. That's pretty exciting, right? And like you guys were saying, so I guess if you did buy on, what was it, like February 1st of 2021 during like a really big pump and dump on the stock, then you might have shares that are negative. But if you bought shares any other day that it's been a publicly traded company, you're currently in the green. So that's pretty darn exciting.
You mean specifically this day right here, somewhere around here?
One day. I think it was February 1st.
Got you.
And I think me and Tevis were actually in the stock that day, but I did not buy on that day. Did you? You bought in January too, right?
Yeah. No, I think we bought like, funny enough, I think Chris and I bought within like 2 or 3 weeks of each other when we first entered SoFi 5 years ago or 4 years ago, something like this, in 2021.
Yeah, my first purchase was January 2021. I don't remember the exact day.
Mine was somewhere around here-ish.
Yeah. You thought it was going to bounce off that $14 low?
Yeah.
Yep.
Yeah. I liked the company. I loved the finance. I remember whenever I looked at it, I had those same feelings that I had whenever I looked at New, where I was like, oh, no wonder this stock is so expensive. Like everything is right in this business. And then it just kept falling. And I was like, wait, what did I buy? And so I just was looking into it aggressively. And here we are today. But
yeah, my first buy was in May 2023, under $6 a share, 5 and some change, I think. And it went heavier than normal too. But I'd been watching on the sidelines for a long time. Palantir had gone on a run. I took some profits off of some leaps that I had, kept my shares at that point. But I figured I didn't need to be 90% in any name at that point. That's when I tagged 2 of my holdings, which I wish I had a SoFi shirt. I'd put it up there on the wall, but Robinhood and SoFi about the same time. SoFi first, and then Robinhood after that. So no regrets on owning those.
Yeah. What did you guys? So we got the MSCI inclusion, but what did you think about the Bloomberg 500? Does that mean anything to you guys? It doesn't seem like there's any assets under management that I couldn't find any related ETFs that track that index specifically. Now,
yeah, it's a small index. That's not a huge deal. Like any index you get added to is good, but it's not massive in terms of price momentum. The other was this week.
Yeah, I couldn't find anything on like the AUC or anything.
Well, they don't have any. It's purely just a benchmark.
Oh, interesting.
Like similar to the S&P 500, but the SPY tracks the S&P 500. So the B500 doesn't have AUM.
And it's just, isn't it just like the top 500 by market cap, right?
Yeah, they don't care about SoFi at all.
Yeah. It's like there's not a committee or anything that gets these things added or gets it added to it. It's just,
which maybe sometimes that's for the best. I don't know.
From what I could read, though, that there is, still potentially hedge funds and these sort of things that do have those types of objectives, which means that SoFi falls into those categories. And I mean, Bloomberg's still a big player. So maybe this increases brand awareness. I mean, for me, the way that I looked at it was Carvana, essentially, I wrote off for dead whenever the whole bankruptcy thing came out, and then never looked at them again until I think it was Roy said, hey, well, they could actually be a target for S&P 500 inclusion. I thought he was joking. I was like, that's very funny. And then you're like, no, I mean, it's really coming back. And I was like, oh my gosh, that's crazy. And now you're actually looking at it as a real investment. But maybe some investors have also done that with SoFi. You wrote it off as a SPAC. You wrote it off as just a bank or something like this. But now that you're starting to see all these, indice inclusions, maybe you have a second look at this name and didn't, have not realized what has happened over the last few years. That probably happens to institutions as well. Sorry, go ahead, Roy.
No, I think that there's a lot of that happens. And it happens to everybody. Like also on institutions too, where you look at a name, it's been years. You're like, it's overvalued. There's not really differentiation. Can they actually execute? There's a lot of hard macro, and you just don't track it. And then you see a headline, you're like, wait, they grew that much by revenue year over year. Noda's appearing on all these different things. They're reintroducing crypto. They're looking at all these other projects. They're being, well, any article that's out there, there's always speculation on what will be included in the S&P 500. SoFi's on that list now. So it's like, that can absolutely get people to take a second look at a stock and a company that have written it off. And I mean, we've seen with SoFi too, but a lot of other names too, that analysts were very bearish on, that they had given very low price targets. And as companies execute like SoFi, like the switch flips and other people begin to look at the name too. So, but I think that the thing that actually is the best for that, even more than company execution, it's a shame, but it's just kind of the reality we're in, is price action. When you hit a 52-week all-time high, when you hit and you're massively up in the last year, and you're making all kinds of lists like, where will SoFi go next? And if you invested $1,000 in SoFi, what would that, those sort of things gets people to pay attention. And especially when you hit a new all-time high, that's like, oh man, this company is going places, even though it's the exact same company back in April that hit yet again single digits briefly.
52-week all-time high sounds like an oxymoron, but I do know what you mean.
Yeah.
I mean, it wasn't that long ago that we had dark mode Roy on these streams every single week. So
yeah. Do you guys remember whenever Tevis put dark mode as a major feature that SoFi released over the last year?
I mean, that was like, we didn't have as much insight into the product roadmap. It's funny, I don't know, man, because it almost seems to me like the stock price corresponds to, like, I guess, management sentiment. Like, I know the stock price absolutely corresponds to retail sentiment. Like, we've been through that cycle with many different names, but even with management, because I feel as though what management was, not necessarily what they were saying has changed, but the volume of their communication has changed. And I wonder if that's to do with the stock price, like that renewed sense of confidence, them going on the offensive, the stock now breaking some previous levels. And now we're seeing Anthony Noto talking about product advancements. They're talking about features that are coming up. They're talking about what they want to capitalize. They're talking about crypto. They're talking about so many different things. And I'm like, wait a minute, where was this, 2 years ago? Right? We would be so starved for any SoFi news. Anything that we got was in a passing comment in a fireside chat or something like this. And I'm just wondering if, because the two things happen at the same time, whether they are correlated, with management just inherently being more confident, as a result, talking about more granular advancements coming soon.
I mean, I think both is true. Like, one, I do think they're listening. They've made that pretty apparent, and that's what retail has been asking for a lot. But also, too, I mean, if there was a time that Anthony Noto comes onto this show, for example, and talks with us, it's not going to be whenever the stock is at $5. It's going to be when it's at all-time highs. So he doesn't feel like he has to come in and defend himself. He comes in to brag, like I bet both are true, that things are getting better with stock price, but also just improving as management goes on.
I mean, they're human too. They've got emotions and they get excited, and everybody feels better when it feels like, when the stock feels like a winner in addition to the company, right? So the company's been winning forever, but the stock was a nice opportunity cost there for a while, right? Which we all heard about plenty. But they're just as human as the rest of us, right? Even 6 months ago, I guess maybe more like 8 months ago, we were still, like, there were still people on X, right, after every single post talking about price action and how it's never going to catch up, and how you can sit in this for the next 10 years and it's still going to be $8, and they actually meant it, and so they're just as human as we are. And so, and as the stock does better, and as the company and as people start to buy in, then they also, I think, get more excited about it as well, and more open and forthright.
And they also have massive positions too, not just at the top, but like we might think, oh yeah, SoFi, we've got a lot of SoFi. And other than maybe a couple people in chat, I know Josh is maybe one. Most of us were minnows compared to the massive amount that, especially the leadership has in SoFi. Anthony Noto, of course, you had a great post on this, Chris, of just the reflection of Noto buying the stock, back in the 4s and 5s. He loaded up more significantly than the shares that he's even being allotted, assuming that they do maintain that price action for the PSUs.
The some of the comments that we're referring to is to this tweet where Anthony Noto is just replying to someone talking about, okay, well, let's actually show off what we're working on. SoFi invests to, help with instant account transfers that are increasing to $250,000 per day. Why would you need that if you had low income users coming onto the platform? You wouldn't ever. Adding level 1 options, trading in IRA, or options trading in IRA, sorry. Greater daily limit withdrawals, the whole 9 yards. So we were not getting this clarity before. So obviously people really liked it. Chris, by the way, is that you? You got kids stomping around?
Yeah, it's me. Sorry, I'll mute.
Okay.
I'm just downstairs in the basement.
Gotcha.
I assume that none of your kids are stomping around. I guess
No, it's
Roy
not my
has
kids.
kids that might be stomping around. I was just doing the calculation. So the Noto has bought, so he's bought like almost 2.8 million shares on the open market. The total price he paid for it is like 14.5 million. And at today's stock price, they're worth like 72.5 million. Like that's just just the things that he's bought. So he's a pretty decent investor as well as being a really good CEO.
Not too bad. But now he's selling like a shill. So what's going on today? Can you explain what's happening with these cash loans that he's end up working with Goldman Sachs? By the way, he works with Goldman Sachs almost exclusively. They have a really close relationship for good reason. But yeah.
Let's see if I can pull up the form 4. I don't know if people can see it here. We'll share. Give me a second. All right. I will zoom in once we get it up. Okay, so this is what came out. What the?
So most times you have to right click and open in a new tab and then show that you can zoom in.
Okay. Lame. Okay.
You just want to.
All right. Try this again. There we go. Okay. So this was the Form 4 that was filed today. So what he's doing, or what happened, is he took out a loan, and the loan is for this amount right here. So $24.1 million. And he's collateralizing that with 1.5 million shares, right? So that's the amount that he would have to sell when this comes due, which is in like August of 2028 or something. I don't remember. I read it somewhere. I don't think it's in here right now. But the way that this works is that the amount of shares that he actually has to give up is between 1.5 million and then less than that. So if it's 1821 or less, so if the stock price in 2028 is $18.21 or less, then I think he has to give up the 1.5 million shares. But it can go all the way up to, if you take that $24 million and you divide it by 49.18, that's the minimum amount of shares the minimum amount of shares that he'd have to sell to get back. So if it goes below this, like if it goes back, I guess the bullish part is that it seems like Goldman Sachs feels pretty darn confident that the stock in, call it 3 years, is not going to be below 1821, because they wouldn't even get their full $24 million back. And then the cap, so if it goes above 49, they actually make more than they loan to him. And obviously there is an interest rate associated with this loan and other things. But basically he said, there's the actual, I don't remember where I saw the August of 2028. There it is. August 28th of 2028 is the maturity date. So he got a loan against his shares. He'll have to sell shares in order to pay that off in 3 years.
Yeah, and for context, there's several different ways to do this, but this is very common among the mega wealthy that own a lot of shares, whether it's Anthony Noto, whether it's Elon Musk. Once you get to a certain net worth level, increasingly you don't see them sell shares, or they might do something like this, which will force them to sell later.
Unless they're Alex.
Yeah. Well, yeah. Like
I'm just kidding.
I mean, he's made a lot of money, and congratulations to him. And sometimes you do have that, but you have tax ramifications when you sell. So oftentimes they prefer to loan against their shares and not have to pay tax.
And for example, I think this is true. It might not be, but so let's say that he gets to the $45 PSU that we get to, then he's granted those shares at a price of $45. He could use that, his cost basis would be $45, and then he could sell those shares instead of these ones that he currently has that are in a much lower cost basis, and save on taxes in the future too, right? So like there's other, even if he only gets the 25, selling his $25 cost basis shares would be less than whatever he owns right now.
You couldn't sell those tax lots though if they were on SoFi stock or if they were on SoFi's platform. That's the only problem. We got to get to a place where
you just showed a tweet where it said that they're adding tax lot sales this year. I don't know, Q1, Q4, sometime.
I mean, he's also gonna get at least one of the tranches, so those shares are gonna get repaid in spades when he gets granted more shares by 2028.
We're hopeful that he gets one.
Well, I mean, sure, but even if they don't get it, let's say in June of 2026, they're just going to renegotiate, go back to the board, and then say, okay, well, we have a new incentive package by 2027 or 2028, whatever. Like he's going to get more shares between now and 2028. Is a very good bet to make, and so he could just be taking a little bit out as a prepayment for himself.
Yeah, I just like how the floor price keeps rising. I mean, it means that to some degree, Goldman Sachs doesn't think that this is just some ultra bubble in the stock, and that they think that it's going to come crashing down, or else that would be very bad for them. To set a floor price.
They actually have, in one of their filings that they've had in the last, I don't know, year or two, they actually do have some other performance stock units that were granted to the management. We don't know a lot about it. Like a lot of the details were redacted from the holding. I know that like one of the things was tangible book value growth. They had to grow the tangible book value by X amount or whatever it was. And
this was recent, right?
It was pretty recent. I think it was 2024 that they did it. And so I don't know if they would go back to the board and renegotiate another PSU deal because they recently got that one, and that one's much more under their control, right? The stock price is always something that you can't really control, but things like your tangible book value growth, that's down to execution. And so anyway, again, we don't know that many details, but I would be really surprised if it gets above say 35 and they get 2 of the 3 tranches. I don't think that they would renegotiate that third one, also because then it would hit their GAAP net income again. So like the PSUs that they have right now, the ones with the 3 tranches, they rolled off in, I believe it was Q1 of 2023 was the last time that it was 2024. Q1 of 2024 was the last time that so you have to expense those over time, right? Based on a bunch of accounting shenanigans. But if they were to do it again, they would have to re-expense them. And even say the stock price hangs around 30 for the next year and they only get 1 tranche, the other 2 tranches, they were still counted against the GAAP net income, even if they don't ever actually get vested and they don't get given to the people.
Yeah, but then the GAAP net income would look better if they don't get one of the tranches, right? Because they already expensed it.
So it's the same. It's already been expensed, so it doesn't matter one way or the other. But it's expensed whether it's granted or not.
Help me understand that, Chris. They don't get the tranche. Why would the EPS not go up then?
Because you don't get the money back from GAAP net income that you gave out for the PSU. So the PSUs get expensed as if using a Monte Carlo simulation, blah, blah, blah.
Okay, yeah.
And so they get it. They then get added or subtracted from your GAAP net income because they're stock-based compensation. They have a value, and I can't remember. I could go back to my article from however many years ago it was.
Thanks.
But they're already expensed. But even if they get even if they don't vest, so say the stock goes to 24 tomorrow and hangs out at 24 for the next year, and they don't get a single share, it's still $90 million in GAAP net income that was lost from SoFi that they'll never get back.
But it's not real.
That's the thing, right? Yeah.
But I remember talking with you a while ago about this, and I was so confused. I was like, how does that make any
It's
sense?
really like, it's just the way that gap net income works.
Yeah, that's just gap.
Yeah.
So,
I guess one other thing real quick while we are talking about PSUs is that there's actually more PSUs that were granted. Like at the time, Noto got the biggest amount that was like for a single person. There were 4 other members of the management team who got pretty big amounts. It was Chris LaPointe, Derek White, and then it was Jennifer Knuckles and Michelle Gill, whose names most people won't recognize because they left the company in 2022. So they won't get them, obviously, because they left the company.
Michelle Gill is now at PayPal, actually.
Yeah, she's at PayPal. That's where she went from SoFi. But there were actually more PSUs granted to rank and file employees than the total of all that was given to management. So if there are, I mean, there's got to be some SoFi employees who've stuck around since 2021 and who have continued working with the company who, you know, if it gets to 25 or 35 or 45, they'll end up getting a decent, like they'll end up basically getting a bonus for the work that they put in and for staying with the company through this time. So I'm actually kind of excited about that as well, is that it's a good incentive for.
That's the SoFi way.
Yeah, that's the SoFi way. Well played, Tanner.
So if these tranches have already been expensed already, right?
Dude, how long are we going to talk about these PSUs?
I mean, they're going to become relevant.
I get it, but
people are going to ask these questions.
It's already diluted. It doesn't matter.
Like, no, but like, okay, so if they've already been expensed, why can't they then just push out the date if they're thinking that they're not going to hit one of the tranches? They say, okay, 25, 35, 45, they're already expensed as of 2024. Let's just push them out to 2027. And from a gap perspective, it shouldn't make any difference because they've already been expensed.
I all I know is that, so the very first time I ever spoke to Chris LaPointe was about this. And he told me at the time that you can't do that.
Yeah, I think that would require a shareholder vote, but I may be wrong on that.
Maybe. Yeah.
Anyway, sorry, Tanner. We'll get off the PS.
Better news to talk about for SoFi. Did anyone see Affirm's earnings, by the way?
I saw the results. I didn't listen to the call because I was busy. They look really like it was an excellent quarter. Their gap net income positive. They continue like if I hadn't have invested so heavily into SoFi, I would be an Affirm shareholder. The only reason I never bought Affirm is because every time I looked at it, I was like, well, SoFi has better margins, basically the exact same growth, and is it a lower, and all the valuation metrics are lower, right? All the pricing metrics, price to sales and price to get gross
which has
profit,
changed.
Which has changed recently, but up until like the last month, right? SoFi's always been the cheaper stock and, in my opinion, the better performing company, and the one that I think that SoFi is probably a little less cyclical than Affirm is. And so like when I looked between the two, I was like, well, why would I buy Affirm if I could buy SoFi and I think it's a better company and I know more about it? But they're honestly like they're one of the very few other fintechs who during 2022 and 2023 continued to perform, continued to grow, executed against their plan, and did like their execution was really good. Max Levchin's just an awesome CEO. Like I said, I would be a shareholder if I wasn't so heavily overweight in SoFi.
People say buy now, pay later seems predatory. I actually think of it as quite the opposite. They remind me a little bit about, or a little bit like Chime, where they're trying to offer those products that help get away from predatory products. So in my opinion, I think credit cards for people that just do not do well with credit is the worst possible product. And you see it with Capital One and many of these other credit card providers. They know what they're doing. Like, I was talking with someone who did not have a good credit score. He has a credit card that he pays an annual fee for, and it offers 0 cash back or points. But he has low credit. So they're taking a risk on him, and they want, because they think that he's going to default, he has to almost prepay for missing payments. And so that is predatory. Yeah, going to buy now, pay later and saying, hey, this is exactly the most that you're going to pay, take it or leave it. I don't think that that's bad.
Yeah, I would say it's less predatory. So that's actually a good thing for consumers. Not that it's not at all or it can't be at all. And there are some buy now pay later companies that are more predatory than others. But yeah, Affirm, like the other thing with Affirm, Chris, is I wouldn't want to be in a company that is basically purely in buy now pay later. There are some other things that Affirm does, even Sezzle, but I mean, that's most of what they have. And so you're exposed, like you said, I think it's more cyclical, but you're also exposed to a lot of regulatory stuff. So I don't think that this is the environment or the administration that's going to regulate buy now, pay later hard. Like they're more for deregulation, but that could shift at midterms. And I do think that there's probably more regulation that's coming over the next few years for buy now, pay later. I think there has to be at this point.
I do agree. But it's very transparent. That's the only problem. Or well, not the only problem, but that's why I don't think that they can really crack down on it too hard, is because they're saying, hey, you're paying this rate. Oh, and by the way, just so if you're not doing the math on your own, if you were to break this, or if you were to pay this rate over this long of a term, this is the amount of fees that you're paying. It's hard to regulate that any more than what they're doing. I mean, what are you gonna eventually do? Is just say you can't offer that product? I don't know.
And I mean, layaway's been a thing for as long as I can remember, right? They just digitized it and made it more transparent and more clear. I agree. I think it's less predatory than a lot of credit card stuff. I mean, people come after SoFi saying you offer these predatory high APY personal loans or high APR personal loans. And I mean, technically, I mean, they are pretty, I probably wouldn't take out a personal loan, right? Like just because that's not the type of thing that I do with my finances. But if you're coming from a credit card, right, you can go from, call it 25% down to 13%. Now that saves you a bunch of money. Or if you have like a revolving credit facility, like they're starting to push out the kind of interest only loans or other things, right? Like all forms of credit, you can argue, if you're like Dave Ramsey style, are predatory, right? But that doesn't. But depending on a person's specific situation, that's not necessarily true, because they might be in a bad financial place or whatever.
I mean, it in itself is not predatory, but how they make money and them being sort of money focused as a company makes it predatory. Because like as a technology, let's say buy now pay later is amazing for people who are actually responsible, but they only make money from people who are not responsible, that don't get 0%, over 2 years, or can't pay or don't pay. And so like that's the predatory piece. And that's true of all credit devices. I think that the interesting thing about Affirm is I hadn't looked at them in quite a long time. And then I saw their financials and they looked really good. And so like those are the two things you have to reconcile. It's like, okay, well, where is the morality piece of, okay, do I want to invest in this or do I want to get, I mean, Roy and I talk about this all the time with regards to some of the names that we choose to forgo investing in as a result of ethics. And then I looked at the financials and I said, wow, like they're growing. They're up and to the right from a financial perspective. They just turned to that profitability not too long ago. And it looks pretty good. I just am worried as to what this looks like if you extrapolate it out a couple of years. Because for them to be making so much money, it means that a lot of people, they're making that money from somebody, right? And
yeah, but that's the cool part is the thing where I think Affirm is being actually predatory is towards merchants. I
was going to say the same thing. Yeah, go ahead.
Because people pick so much crap at Visa and MasterCard charging 2.99%. They go, oh my gosh, these fees are like, can Trump do something about this? This is an unbelievable fee to pay. And then see what Affirm charges. They charge 6% to the merchants, and they'll say, hey, how about this? Instead of us charging the APY to the customer, Samsung, Peloton, these larger customers that have bigger ticket items that potentially would stop someone from purchasing because they might not have that money in their account right away. Why don't you guys pay their APY? You pay that 11% over those terms, and we can give that loan to them perfectly free. So Peloton, instead of, they could do one of two things, right? They can go to their customers and say, hey, we're having a 15% off sale on our Pelotons, or they can say, hey, why don't you, over the next 24 or 36 months, pay it down with 0 APY? It costs them the same, and it's essentially a way for them to, pay Affirm directly, and the customer doesn't have to pay that fee.
Well, wouldn't the merchant just forward over the cost to the consumer to say, okay, well, instead of you paying it for 36 months, you're going to pay it for 38 months, and the additional 2 months are basically what the merchant would have been charged anyways. I'm just asking because I don't know how it works.
They take the hit in terms of margin. Like you're paying the same price as a consumer, and
yeah, they can put it. They can price it into the cost of the item.
Right. That's what I'm asking. Why wouldn't they do that?
Because then the people who aren't paying are just going to say, hey, why is your price so expensive? I'm going to go to this cheaper alternative. So they still have to play into the market dynamics of picking a product that still sells at those prices.
And I mean, if you're buying a Peloton, it costs $2,000, right? Or whatever that number is. And so if they say, hey, it's going to be, this many payments of this amount, you can do the math really easy and say, hey, that's not $2,000. Why?
What Buy Now Pay Later has done really is just open up another credit window for people that either have very poor credit or just are like against credit cards, but they're like, hey, Buy Now Pay Later is fine. Now, to give you an idea on that merchant take, PayPal actually increased their Buy Now Pay Later amount to 4.99%. Before it was just in line with whatever they're doing for PayPal branded. And they did that because they're like, okay, everybody is charging a lot more and we can. And they still have, if not the lowest rate, it's one of the lowest rates for Buy Now Pay Later.
Yeah. No, that's where the market's going for Buy Now Pay Later, is that you're charging more. And let's not forget, that's not the only source of revenue that Affirm also makes. They do have a massive card program that's growing quicker. They have 2.3 million active card holders, and it's not available in like any other country other than the US, and they barely promoted it. It's still, I think, in beta. Like, it's incredible. So they're growing like crazy there. And then they also want to get into deposit accounts, which I also think is in a very, very small beta. So they want to start going after direct deposit and do those sort of similar activities. And remember, if any investor is looking at Affirm, you guys are looking at it for the exact same reason. And that's the founder that ended up starting the company is the godfather of fintech. Max Levchin started PayPal. You can bring up a lot of names on who you think started PayPal: Elon Musk, David Sack, the list goes on in the PayPal mafia. The original guy, top dog, Max Levchin, now running Affirm. Well, always has, but he is an amazing founder. So that is a part to play.
Does this market make you guys want to diversify into other names? I think this is something that Roy and I have been talking about a couple of episodes now, because okay, Affirm's, and similar to SoFi, I'll bring it back, right? In the beginning of this episode, we said, well, it's great for the index inclusion because it leads to price discovery, and people are saying, oh, SoFi, that's that company from 2021. Let me relook at their financials. That was like Affirm for me this week. They did earnings. I'm like, oh, Affirm, let me look at their financials. And I was saying to myself, wow, they have pretty good financials. They're growing. Everything seems to be going up into the right direction. And so, not that I want to invest in Affirm or whatnot, although it's more of an option now than it was, let's say, 2 weeks ago when they weren't on my radar at all.
Sure.
So I guess my question to you guys is like, with us getting price discovery on so many different names, like, does that naturally make you want to diversify? I feel like that's a built-in feature of a bull market.
Yeah. I've been diversifying a little bit. I'm still very concentrated. I'm at 9 tickers right now in my portfolio. I added one, and I have room to add another, and just kind of think what I want to do and what I want to add when I want to add it. So I'm not like firm on that. There's a lot of names I'm looking at, but I'm not in a rush to that. I think one thing that we have to be cautious about, I don't think any of us would do this, but I know for some, this is their first bull market cycle that they've been in, and that they missed the bear market before. If you spread out more broadly, it can make sense in a bull market, certainly. Make sure you're doing it in names that are actually quality, that you have conviction in. Don't just do it because, oh, so-and-so is talking about this stock, or, hey, it's up a lot and it'll probably go up more. There's a danger in that, because at some point, I don't think we'll have a bear market anytime soon, but that can surprise us. those names that are not high quality will get crushed. Everything will get crushed, but especially those that are high beta names that really are just running on sentiment or just as a catch-up type of trade or a lot of speculation that doesn't actually materialize. You can really get hit hard in your portfolio. So, but yeah, I think it always makes sense to be looking at other opportunities and see if there's others there. The other thing I don't want to do is I don't mind taking incremental gains, especially on my leaps, my options. I have to do that from time to time. But I don't really want to sell shares of pretty much any company I'm holding right now. Like I realize that some of those, like Palantir, it may underperform the market for years. And I'm like, I'm good with that. I'm good with that size of the position, but I'm not in a hurry to sell that. SoFi's run up a lot. I think there's plenty more run there. Robinhood is not cheap, but I think over the next 5 years, I think it's going to be in a great position. I don't mind holding that. So it's basically with the cash and some gains that I've taken off of options that I have looking for maybe a new home, but I'm not going to force it either. I'd rather it sit in cash than, well, this one looks okay, I guess I'll get in that one. I'm not going to do that.
Yeah, Mike, go ahead, Tanner. Then I'll go.
I was just going to ask Roy, has your cash position increased or decreased over the last few weeks?
Decreased.
Yeah,
I added more NVIDIA. I did a small DCA into Palantir. I built out air test systems from basically nothing to I allocated about 5% of my portfolio. It's
wow,
up.
That's a pretty decent chunk.
Yeah,
it's up to like 9% now. So I think I'm under 10% cash, but it's right around 10%. There's still plenty of money there to use. Some of that I'm doing in cash secure puts that never fill on HIMS. And outside of that, like some of it just sits in cash, and I'm like, I'm not even doing puts on that, and it's there in case we get a nice dip. I almost thought that was going to happen with NVIDIA with that initial reaction, but it didn't, and I didn't catch it at 170, so I was like, that's okay.
My cash position, I did a update on August 1st, and I'm going to do another one on September 1st. My cash position went from 32% to now being just under 8% this month alone.
You got assigned a bunch of CSPs? Is that what happened?
Partially, but I've also just been buying up shares. Like I bought a bunch of SoFi this week, and I wasn't expecting to. I mean, we had that conversation last week.
Yep.
And I think the question that I asked myself was like, okay, well, it's my number one conviction play. Do I think it's going to go higher or lower over the next 6 months, and where? And then I looked at all the catalysts we had, and I said, well, yeah, obviously I think it's going to go higher. And yeah, I don't know. I put a little bit more into that, but I've also been starting new, positions and trades and whatnot. And so, yeah, it's really difficult to stay in large percentages of cash. And I think that when we got that dip, I was buying up a whole bunch of stuff. And then I can also afford to be more aggressive with the CSPs if I want to be in something. Like I've been writing in the money CSPs for SoFi for like the last 3-4 weeks. And I haven't been really assigned. So I was like, I'll just buy some shares.
Yeah. Man, I've been full on bullish just in the whole market. And like what you said, Tevis, about buying more and more stocks. It's funny because I brought my portfolio down all the way to 14 names, and I feel like I'm climbing right back up to 30 because everything I'm looking at, I'm getting really interested in because I feel like the market's like walking on eggshells, but I'm not. So, Chris, I actually had a question for you because this is what a company I'm going to be looking into tomorrow. I think you have a position in this name, CrowdStrike.
Yeah, I own CrowdStrike.
Can you talk about that a little bit?
Yeah, so CrowdStrike is, so I'm like, if you really want, you should ask Brad Freeman about this, right? Like Brad Freeman knows so much more than I do. Essentially, like the reason that I started my position in CrowdStrike is because back in, at the 2022, when we were in the bear market and nothing was working or, everything was down, like they were the undisputed leader in cybersecurity. I couldn't see cybersecurity going anywhere anytime fast. I only saw it getting more and more. They were like winning contracts from Microsoft and Zscaler and other things. And like the CEO is a bit of a trash talker, right, on his earnings calls, which came back to bite him a little bit when they had their snafu. But like mostly it was just like, this is the number one name in something that's going to be a secular compounder going from here. And so like it was probably one of my, so it was that and Duolingo and a couple of other names, Mercado Libre at that point I was going really heavy into when they were down really low. So this was, when Duolingo was under 100, when CrowdStrike was around like 120. Just during that dip. And so I added a lot then, and I still listen to all the earnings calls, but I just feel really comfortable that like they're a founder-led business. They continue to execute, like they're if you look at their net ARR and everything, like all the metrics, like just quarter after quarter after quarter. Now they have had a bit of a slowdown because they've been giving pricing benefits to people because of the outage that they caused and everything else. So their results have been slightly weaker.
That's a different one, by the way. I apologize.
Thank you, Josh. That's
Thank
really
you so
nice
much,
of you.
Josh.
That's crazy.
Yeah.
Sorry, Chris.
No, you're totally fine. We should thank Josh because he's awesome. But yeah, so that's kind of, and so I've been listening to earnings calls for 3 years, but I don't consider myself an expert in the cybersecurity space. But I just continually see like they continually execute. All the numbers keep going up and to the right. Like it's something that now they are pretty pricey right now. Like if you do like a discounted cash flow model on them, they need something like 25% growth or over the next 10 years in order to justify their current valuation at their current, at their trailing 12 months of free cash flow. So like there's still a lot of, I wouldn't say they're certainly not cheap right now, but they're going to be a leader is the issue. And so I do think that in that 2022, 2023 time period, they were cheap. I don't think that that's probably going to happen again. Even after the outage problem, they didn't drop below 200. And then it was just a V-shaped recovery from there.
Chris, do you feel comfortable sharing how many names you have in your portfolio and maybe what your top 3 are?
I was actually just looking that up. So yeah, I have, it looks like 15, but really only 14 because one of those is Lemonade, which I only bought the 3 shares that you gave me. Which by the way are doing fantastic. So Lemonade is one of the ones that like it's been on my DD list forever, but I've never gotten around to actually doing it because I don't understand insurance, and I know it would take a lot of like I'd have to go back and listen to like 2 years of earnings calls, and like it would be a big time investment, and I just haven't had the time. But so call it 14 names are in my portfolio. The top 3, do you guys want to guess? I think you guys know the top 2.
SoFi.
Yeah.
Is number 1.
Yeah, by far.
And
Duolingo?
Hims
is number 2.
Yeah.
Chris, no super chat option?
So I got demonetized apparently for some reason. I don't know why. It's because I'm reusing other people's content, but everything on my channel is either lives or things I've done on my own. So I don't know what the YouTube AI saw that it didn't like, but there's no super chat option for me. I'm sorry.
Yeah, Josh, thank you, brother, but you're being insanely generous right now. I don't know if people know Josh very well, but he has a mega multi-million-dollar position that's almost exclusively in SoFi. He does diversify, but SoFi is a big contributor to that portfolio, and he's been on the channel and SoFi Weekly a few times.
Josh's, just the P&L from Josh's Leaps position is like bigger than most people's portfolios will ever be. I saw it when he posted it a few days ago, and it was insane. And the fact that he plans to exercise all those shares as opposed to just like selling the Leaps and keeping the cash is crazy conviction.
Yeah. Heinze was right. So those are my top 3. If you throw up his comment from
where was that?
SoFi,
8:49, 1 minute ago.
What's number 4, number 5, Chris?
So the third one is Duolingo. That's my third biggest position.
Yeah. What's 4 and 5?
4 and 5 are, I think now.
What are 6 and 7?
What are 8 and 9?
No. We'll go top 5 and then we'll leave it at that. 4 and 5 are actually CrowdStrike and NVIDIA.
So the reason why I ask is because we've talked about Hims, we've talked about Dual, we've talked about SoFi.
Oh, and Nubank is really close in there too. It's like those 3 are almost the same.
We know NVIDIA. CrowdStrike stock tank soon?
I'm not the right person. I don't have the in-depth knowledge there. Like, it's just I know they're the leader. I, listen to their calls. They continue to do the right things, and I'm good with that. But I wouldn't feel comfortable doing
I've been getting to know
stock.
Brad's the guy to do it with, but he probably charges. You know what? Brad knows what he's worth, and he's like the Joker, right? Like,
Yeah, don't
why
do
do it or if you're good at something, why do it for free?
Yeah, there's basically three names in SaaS, and throwing in cloud them in there. Cloudflare also and Palantir that are just amazing companies, extremely expensive multiples. Of course, Palantir is on an island of its own, but that happens. And so sometimes you're given a gift. CrowdStrike, the dip that didn't last very long at all, was a gift. I didn't get in that. Some people did, but otherwise, a lot of times you're just on the outside in, waiting to get in at the right price, and it just keeps running.
And actually, the thing about those two names is, like, if you look at Duolingo, again, coming back to Duolingo, the reason that it's one of the reasons it's my third biggest position, right? First of all, it's run a lot since I really built out the position. But then in addition to that, like, if you look at Duolingo is a better SaaS company from a results perspective than CrowdStrike has been. They've been more consistent. Their free cash flow is actually higher. Their GAAP net income, their net income margins are actually higher too. And so,
And yet something is pulling me to invest in CrowdStrike over Duolingo.
yeah, that's because you're crazy.
No,
I'm just kidding. We had this conversation.
Yeah, this is Hameen Ball that does these Clouded Judgment podcasts, and he updates us each week on Friday. He'll have another one out, but I mean, Figma's actually up there. I forgot Figma is, and
Is it Hymeen? I thought it was. I've been calling him Jammin.
I think it's Hameen probably, but I do call him Jammin sometimes too. I don't know.
It's Jammin Ball.
Figma under $70 close today, Roy.
Yeah. I might. I think I'll be okay with my one share, but I am really, that keeps me up at night. Like, oh man, it's down 5% today. I've lost $4. That's one. Like Figma, honestly, if it gets back under the IPO price, I might make that a position. I really like it as a product. I think it's a great company too, and it's a shame for both them and Adobe that they didn't manage to have that merger and acquisition go through. But that happens. But yeah, right now it's really expensive, and a lot of the theme on this Snowflake's going to be, by the way, a lot higher. They posted up really solid earnings. Is top line revenue growth that these are all growing massively and quickly. Shopify always has trades at a premium too, but yeah, a lot of good names on there.
Yeah, but Duolingo's at the top of that list and trades near the bottom of the valuation. And I know I'm getting a lot of crap in the comments. If you don't like Duolingo, go back and watch the Stock Tank episode. And if you want to debate me about it, you can tag me on X and I'll tell you why I think that you're wrong.
Yeah, I don't know. I see those types of names and I understand, like just from a story stock perspective, all of those companies are insanely important. How does Duolingo fit into that? I mean, there's no disruption coming to most of those names.
Name another ed tech firm. Other one. Just one.
Docebo?
Chegg.
Yeah.
Chegg? Oh my gosh, you got to be kidding me. Chegg is a bankrupt company.
Isn't Docebo a ed tech company as well?
Okay, I don't know that name. So there you go. You did name one that I've never heard of. There you go. Duolingo is the best ed tech company that there is. And they're going to expand and their results are just unrivaled.
Well, and I don't think you necessarily so all of us, I think maybe Tevis doesn't anymore, but all of us own Robinhood. And you can say, yes, you do.
I do.
Yeah, we can say, okay, it's a great company, generational company. They're doing amazing things. They're market leaders here. Are they essential? Like if they disappear, it's like, no. I mean, like there's plenty of other companies that do what they do. I don't think as well. And I don't think that space would iterate as quickly without a Robinhood there. But so just because something isn't like essential and vital for humanity to get right and the leader in that doesn't mean it's not investable.
I mean, SoFi is not essential either, right? By
Yeah.
that
Yeah.
definition.
If SoFi disappears, it impacts, me, that's my bank, and you, Chris, but like largely, yeah, it's perhaps the space will be a little bit weaker, but yeah, it's not vital.
What do you guys think about Tom Lee's comments? Not only that he believes that we're going to be in almost another 10-year bull run from now till 2035, but that also financials can make up for 40% of the S&P 500.
Yeah, I saw that. I was owning a lot of SoFi and a lot of New and a decent amount of PayPal. I was pretty happy with those
You hold
comments.
Robinhood as well?
And I hope so. I have Robinhood Leaps. I don't actually have any shares, but when in the April sell-off, I was like, this is stupid and ridiculous. And so I entered into a decent sized Leap position that is now much more decent sized. But yeah, so I do, and I'm planning on probably exercising some of those because I think that it's that their mode is speed, which by the way is also Duolingo and Hims' mode, but we won't get into that. But I think like Hood is really, really good at iterating. They pump out products so fast and they listen. They've won me over as an investor. I think that they will do very well. I do think like right now I wouldn't buy them just because I think that they're pretty expensive. They're like a 30 price to sales. It might have come down by now. It might be in the high 20s or something. And I know that, and their margins are great, right?
Bro,
But
did you see their most recent monthly numbers? And do you think that August is going to be any different?
No, I think that it's going to be awesome. But the thing is that they're very cyclical. They're much more cyclical and much more dependent on macro than other things. So I think that there's a chance, right? And there's a chance that you have an opportunity to get in lower, not because they're going to be a worse quarter, but because they are beholden to the macro more than other companies.
I swear this, I just got a text from Steve saying, not coming, don't wait for me.
Like an hour
we're
late.
about to wrap in 2 minutes here.
I love I disagree. Well, I see where you're coming from, Chris, and like certainly like if we get the seasonality that a lot of people expect in September, especially as it relates to crypto, Robinhood will be trading at a much cheaper price, and for some that are looking for entry, that might be an entry. But what I love is that we all went from I was in Robinhood. Well, I was in Robinhood just as a trade initially. I didn't even see like the long term. I was like, be fine long term, but it's just hyper cyclical. Get a benefit from a good company that's way too cheap. And so it took me some time to figure out the thesis long term too. But I love that we've gone from at best it's just a trade only to all of us having positions. And Chris, I'm looping you in that because you said that you were thinking about exercising some.
Oh, I'm sure I'll exercise at least some.
It's cool that that kind of happened, and that's like honestly that's if there's a company. When Robinhood IPO'd, I remember looking at it and saying, why would I ever invest in a company like that? And I kind of made fun of Kathy Wood for going really heavy into Robinhood. She lost a lot of money on it, though, to be fair.
Well, I mean, look, if we're being fair, I think Robinhood had one of the most successful rebrands of that company because of what happened with GME and whatnot. And a lot of people, put it in the bucket of, I never, want to invest in this company, like without even looking at a press release or an earnings call or anything like this, just because of what happened there. And now I see Vlad on all these podcasts on, CNBC and everything. And he's talking about the future of finance and the blockchain and tokenization. And I just think that them having that complete 180 from the retail market perception has correlated highly with their stock price being supported by retail.
And I wrote an article about Robinhood. I never actually published it because I didn't finalize it. And then it got to be a few months later and I was like, oh, this isn't current anymore. And so I never finished it. But it was way back when where at that point, because they did a lot of things in 2023 in the background that really set them up to do really well in this next bullish run. But back when I was writing that article, it was like 2022, and their stock-based compensation, like people were getting mad at SoFi stock-based compensation. Robinhood's was exorbitant. It was really bad, and they canceled a bunch of that stuff, right? Like to Vlad did to his own financial detriment. He was like, "I'm good. I have enough." Right?
They took a founder hit, founder reward hit as well.
Yeah, that's what I'm saying. Like he literally gave up his own stock to help the company, which that's a really honorable thing to do.
And they do as well.
But back then, so their SBC was really high. They weren't getting close to GAAP profitability. They were declining, right? Because we were in a crypto winter and in a bear market. And so like at that point, I was like, I don't know why anybody would buy this. Now, when it got down below cash, right? Or like right at cash, that's a different story. Now, but the other thing is that at the time, and it's really easy now to look back and just say like, oh, they've like, the thing is that Robinhood has executed really like, so they've had a lot of tailwinds, but at the same time, they have taken advantage of those tailwinds at every single turn. They've done basically the right thing at the right time in order to leverage all of those tailwinds to make the most success out of it that they could. And that's something that like, even in 2022, like I was a Robinhood user, right? Like at that point, and they weren't shipping products that quickly. There wasn't a lot of innovation going on. Like it was pretty much the same as when I signed up in 2021, right? And I was just using it for it's originally where I just had my wheeling portfolio, actually, Tevis. And so that's where like just as a user, the experience wasn't getting any better. Like it really, they didn't have what you see today from Robinhood wasn't on that execution level until basically 2024. And so that's why at the time, like when Amit first was saying, hey, this is going to be a good swing trade because, if crypto comes back and you get this gold, and Roy, you were saying the same thing, right? Like they've got a lot of tailwinds, so it's a good trade. But they coupled those tailwinds with this change in, I don't know if it's a change in a culture or something else. But the company really did change at that point. They started shipping products. They started doing really smart acquisitions, right? Between the X1 thing and then their crypto. I forget the name of the crypto trading platform that they acquired. But like there were a lot of things that they did right. It wasn't just that they had these tailwinds. It's that they executed well. And I think they got really lean internally as well. And so there was just a lot of things that they did right. And so that's what, when we got the April sell-off, that's why I was like, I'm going to enter with leaps because it's that the company's execution changed. It wasn't the price.
Yeah. And one other figure there too, and I had to look this up because I couldn't remember the exact number. At the end of 2020, they had 3,800 employees. They have fewer than that today. Now they have grown since this time, but at the end of,
I think they went from like 38 to like 2,100.
Yeah.
And then now I think they've climbed up to, I think it was 2,400. And then they made a little bit of a step up to 28 or 2,900 because of Bitstamp.
Yeah. The acquisitions. Yeah. They're 2,300 at the end of 2024 and they'll hit 3,000 again, but they are being very efficient with everything, with the capital that they accumulated from the IPO, with the way that they, with stock-based compensation. It's just, and 90% of the cost structure is controlled. And it's just like, man, but you're absolutely right, Chris. Like this is a company that went as like, it was an undervalued company that was good, maybe not elite, and they became elite. They forced themselves to. And I think SoFi might be heading that direction too. Part of what helps is massive tailwinds instead of just being headwinds all the time for SoFi. And one of those like little tells that I see, and I saw this with Robinhood too, is after the GameStop stuff, they became hyper defensive as it went to press, as it went to also the way that they ended up approaching marketing. And when they realized, okay, we have a lot of tailwinds here, they went after it with marketing spend that really increased very deliberately, and the channels that they went as well. Also, how much they interacted with others. Not just us retail, but that's really was the beginning of it. And we've seen that continue. I'm seeing the same thing with SoFi. I think that you commented on this too at some point, and we're both, banking at SoFi. And so I've actually removed some of these notifications just because there's so many, but their marketing stuff is everywhere. It's not just in the app, it's everywhere. And so this is a company that I think realizes that they have phenomenal tailwinds behind them. We see the way that Noto is interacting with shareholders and giving a lot more details as far as a playbook. This is a company that's a lot more confident than they were, back 2 years ago. So I love it.
I would also say the one thing that I should say is I was also very concerned with Robinhood's credit card. Like I thought that because when Vlad introduced it, he said, we want to have this in the hands of every single gold member.
Yeah.
And like when I heard that, I was like, oh my gosh, that's going to be a money. If they just start giving this credit card away to every single person without like worrying about the underwriting, which is what I falsely assumed that statement meant. Then like I was really concerned about that, but they scaled it really, really slowly, right? Slowly enough where people are mad that they haven't gotten very many gold cards. And so they did it in a way that was very prudent, that was very smart. And so that was actually a really big concern of mine. And that's why I didn't get in earlier, is because I was always concerned about that credit card overhang and the possibility of losing a bunch of money on it.
Really quickly, to everyone donating, I do really appreciate it. We all really appreciate it. It's not needed, but thank you so much. To some of these comments about how, some of these plays have changed people's lives and everything like this. It's just crazy. And one of the things that I didn't expect whenever I started YouTube is the amount of success stories and life-changing events that some of these equities have had. We've gotten very lucky, and some of these picks have been much better than we ever would have thought. But this is what happens in bull markets. Everyone's a genius in a bull market, and right now I'll take it. But congratulations to everyone. But hopefully, if we continue to pick companies and don't judge them on TA or short-term sentiment, that there's not a time where we have to sell a company that just continues to execute. So as long as we judge companies, and we don't marry them, but we judge them based on their execution, we can hold this and continue to ride the coattails of potentially, faster than market gains growth over a multi-year leg, time frame. So I think SoFi hopefully is one of those names. I hope, Robinhood, NVIDIA, many of these names that we talk about on this channel and on all these respective channels. It's just such an amazing journey. And I'm glad that we've created communities that are based around making wealth together, because that's just freaking amazing. But do we want to get into the SoFi or the not that name anymore, the Fintech Friday after hour show? And when does that come out? Do we drop that tomorrow or Saturday?
Whenever you post it.
Whenever I post it. Okay. All right. I'll have to think about that. What?
I said whenever you post it, which is always late. So
it's just true. I won't admit to being late on this show, but on the after hours, I am late, and by like a good margin. Sometimes days. All right. Well, ladies and gentlemen, make sure you subscribe to.
Can I share one more thing?
Sure.
Just to sort of wrap this up.
Paul, you didn't put in a ticker, brother. Thank you, though. I really do appreciate it. But
all right, back to our PSU conversation. Tim Sweeney actually responded in real time because he's great. He said, answer to why you can't just extend the PSU since they've already been expensed under GAAP, because the expense amounts were based on the original terms of the PSUs. Under GAAP, an extension constitutes a modification that is treated as a new issuance, and then you trigger a new calculation of the value of those PSUs, and the expense deduction would be way higher now because the stock prices are so much closer to the triggers. Hence, the value and expense would be much higher. So there you go.
You'd have to re-expense them again. GAAP is weird, man.
Yeah.
We asked the question and in near real time got an answer from an actual lawyer on this stuff. So this community is pretty cool.
That's also been one of the greatest things about having a community is I'll run into a problem and there'll just be people that's what they do for their full-time job. It'd be like, hey, I can help with that. I'm an accountant in Canada. I'm this, so that's been awesome. Ladies and gentlemen, thank you all so much for watching.
Thanks, everyone.
Bye for now.
Thank you, Josh.